Hello, everybody. Welcome back to another episode of the Market Close. We are here today, Thursday, August 29th, 3:46 p.m. And we've got a ton of earnings on deck. We've got Ulta. We've got MongoDB. We've got Dell. We've got, what else do we have? We have Lululemon, and then we have a couple others. So it's going to be a big earnings after the bell starting at 4 p.m. This is kind of wrapping up earnings. Tomorrow, there's not really that much more earnings. Yesterday, we had obviously Salesforce, CrowdStrike, and NVIDIA. So today, we are kind of wrapping up the rest of earnings for the day or for the quarter, and we're going to put an end to the Q2 earnings cycle. Thank you, everybody, for being here. We've got a lot to talk about. We had a lot of headlines break throughout the morning after the market open was done that I want to discuss and kind of go through in terms of what those headlines were and sort of some of the implications that they're having for the broader markets. Now, one thing that's interesting, if we take a look at the broader market, is we got a little bit of a dip. And it's kind of interesting how this is playing out. So S&P topped at 563.67. This was around 1250. This is probably an hour after we got off stream in the market open. And then we fell all the way to 557. Right now at 558. S&P is going to end flat for the day. So the S&P and the broader market was up. Some of these stocks have held onto the gain. So for example, IWM was up 1.4%. Now it's up 1%. CrowdStrike was up 6%. Now it's up 3.69%. SoFi, incredible day. But as you can see right here, took a nasty little fall in the past 30 minutes. It hit 830. I mean, just dude, I mean, a 10% day on SoFi has not happened in a very long time. Now it's up 7%. So I don't think anyone can complain. I think an $8 close is super, super bullish for SoFi. But it was victim to everything falling. Bitcoin took a little bit of a hit. It was at 61,000, now 59.5. That's why Robinhood took a hit. It was at 2065, now at 2027. Rocket Lab up a little bit on 2% on the day. And then NVIDIA right here. NVIDIA was never green on the day, but it got to like 123, 124-ish. Now it's at 118 on the day. We have Dell earnings as well. Yes, so we'll talk about Dell as soon as the market closes. So in terms of why we're seeing this volatility, kind of don't have a reason for it. If I were to guess, I think it's kind of just people taking profits on a really green day. And the reason I say people taking profits is because no one thought, I don't think anyone thought we would have a massively green day. And the reason for that is because NVIDIA had great earnings, and we talked about that in the morning, but unfortunately the street just was kind of tired of NVIDIA. They didn't feel like buying up NVIDIA. So NVIDIA didn't pump. If the entire market is contingent upon NVIDIA, well, if NVIDIA is down 4 or 5%, the entire market can't pump. But that was the opposite. At one point during the day, this is what I tweeted. This was at 1:07 p.m. The S&P 500 was up 1%. The QQQ was up 1.15%. IWM was up 1.4%, and NVIDIA was down 3%. So we were getting a market broadening without severely punishing NVIDIA. This is still happening right now. It's just those percentages on those major indices has come down a little bit as we get into the close. So from that perspective, it kind of feels like a basic day where the market pumped and it was a fun little pump, but people ended up taking their profits. Another reason I don't think people thought the market would pump that much today is because we had a lot of data to look at from the macro, and we had 4 pieces of data that all came in really good. The top line one was GDP revised at 3%. Very, very strong for the American consumer. The fact that it's growing at 3% is important, and it shows that the United States is probably not entering into a recession. We also had the unemployment data that came in weaker than expected, and then core PCE and PCE data also came in weaker than expected for inflation. So the implication of what you're looking at right here about 3% GDP growth, a lot of people felt, well, this means there's no way you can have a rate cut. I think this is a very inadequate and naive way of thinking about the rate cut. So you had a lot of people coming out saying, well, there's so much growth, there's no way you can do a rate cut. It's like, no. We're not going to erase Bostic, Goolsby, and Jay Powell at Jackson Hole last week, that all of them mentioned the labor market like 50 times. They're all concerned about a cooling labor market. By the way, you cut rates before the labor market collapses, right? That's the whole definition of a soft landing. You don't do it after we have unemployment at 5%, because then it's a recession. Then it's like, all right, so like we're done. Like now we're going to have to deal with the recession. So I think anyone saying this means we're not getting a rate cut is just full of shit. That's just wrong. Like this is not how the data is looking to me. What it looks like is the labor market is increasing. It's not rapidly increasing in terms of the unemployment levels, which is good. That means there's a chance to nail a soft landing and save the labor market from collapsing. Are we going to get 50 bips? No. We don't need to get 50 bips. We can get 25, start the rate cutting cycle, make sure inflation continues to come down and doesn't reaccelerate. Is there a risk to inflation reaccelerating? Not really, in my opinion. I mean, I was looking at oil today when I was going for a drive. Oil is now, or gas is now $3.03 a gallon. Like, I've never seen it that cheap in the past couple weeks. I know some of you guys in Texas or in the Midwest, you're seeing it at maybe in the 290s or 280s, but I haven't seen in New Jersey oil at basically $3 a gallon. Or gas at $3 a gallon. So to me, this means inflation is coming down. Growth is not being sacrificed for inflation to come down. And we're getting a 25 bips rate cut to make sure unemployment does not rapidly increase, which is literally the definition of a soft landing. Increased growth, decreased inflation, and a rate cut to make sure the labor market does not completely get destroyed. And then on top of that, you had NVIDIA just like crush earnings. So we got 260 in Texas. Wow, dude. I don't feel like I've seen 260 since the pandemic, dude, or a little bit before. Well, the pandemic was like 180s. 260 was back when I was in college. I saw 260. That was like 2019. So yeah, we haven't seen that in Jersey in a while, but the point is, I think inflation's coming down and the Fed is doing this in the right way. So if you are concerned about a recession, I'm not saying you shouldn't be concerned. I'm not saying there's no chance of it. September is going to be very volatile, which means all the stock gains we're seeing right now, they could all get wiped out in September. And then before the election, they get wiped out. And then maybe November, December, they come back, or maybe it just keeps going up over the next couple months. I still think there's a lot of volatility left. But if we're just looking at the raw economic data, it is really hard to see the Fed not cutting rates. And it's really hard to see the consumer getting so hit of this massive recession if unemployment is not increasing as dramatically as well. Couple of other headlines as we get into the close. So Apple, it's up 1.53%. We talked about this morning. Apple is ordering 90 million units to make their iPhones. They expect to sell 10% more than what was expected, which means the market feels there's going to be a massive AI supercycle upgrade coming for Apple. On top of that, we talked about Openai raising at $100 billion. Guess who the Wall Street Journal just said is going to be one of the investors, hypothetically, not fully confirmed by Apple, but if this is true, this would be quite interesting. It's Apple. Apple is in talks to invest in Openai. This investment will be part of a new Openai fundraising round that would value the ChatGPT maker above $100 billion. So we saw Microsoft and Thrive Capital were investing. Apparently, Apple's doing it as well. I think Apple has lost the AI debate in terms of the foundation models. That doesn't mean they're losing the overall AI market, but they're basically admitting right here they can't build it on their own. I mean, they should have been building a foundation model 18 months ago. They're not doing it. Probably got a lesson from the EV business. Hey, we kind of messed up trying to build our own EV. We might as well have just invested in Tesla in 2018. Tim Cook refused to take the meeting with Elon Musk. Probably the best thing ever for Tesla shareholders. Could you imagine if Elon had to work under Tim Cook? That would have been probably not the best for Tesla, but Tim Cook basically saying if you're investing in OpenAI and if OpenAI is the default model on the new iPhone, I mean, it kind of makes sense to own a little bit of it, right? If you're going to give Sam Altman the keys to 2.2 billion consumers, might as well own a little bit of the pie as well. So makes a lot of sense that Apple is investing in OpenAI, or it seems like Apple is going to be investing in OpenAI. $3.50 in Arizona. Yeah, that's not bad. It was $3.50 in New Jersey for gas a couple of weeks ago, but now it's come down to about $3. So I think that's bullish for OpenAI. I think that's bullish for Apple at the end of the day because it gives them at least a little bit more of an AI moat, or at least the street thinks there's a little bit more of an AI moat. And it just means AI is not stopping, dude. It just means AI is not stopping, and it means AI is rapidly accelerating. Another big thing, by the way, where's Microsoft stock? Microsoft, we got 6 minutes till the close. Microsoft was at 418, 420 on the day. Now it's at 412. So still up, just not up as much as it was. Another thing ChatGPT said, so I've been saying on the stream for the past couple of days, I've been using these LLM apps a lot more, ChatGPT, Perplexity, a lot more than Google. That doesn't mean I'm bearish Google. I'm just really starting to, if I get like a gut instinct of like I have to ask a question, I go to an LLM platform, not Google, because I just know I'm going to get a better result. Here's what ChatGPT says today, or OpenAI. We have 200 million, this was confirmed to Bloomberg, weekly active users for ChatGPT, which has doubled since last fall. So in 1 year, they went from 100 million weekly actives to 200 million. That's probably why they need to raise a couple billion, because they're losing so much money on this compute, because they're not really making any money off this yet. But AI is moving very fast. And so the investors that are buying it at 100 billion, they probably think this thing's going to $1 trillion. And that's why they're buying it. and they see that 200 million weekly active users are probably going to become 500 million in the next couple of years, and then you get to 1 billion weekly active users. Now you're really taking away a lot of volume from Google, and then it becomes an all-out war for the consumer attention. By the way, this 200 million weekly active user for ChatGPT, what do we think happens when the AI upgrade super cycle happens for Apple? If you believe the Apple AI super cycle is coming in terms of upgrades, and the default model is GPT, I mean, it looks like GPT's growth is only going to be bigger and bigger and bigger. And it looks like more people are going to get exposed, because most of our friends, I'm sure you guys know, they still don't know what ChatGPT is. Like, they probably have heard of it, but they don't know they probably don't even know what LLM stands for. Like, I would bet if you text 5 of your friends, like maybe one of them, 20% of your friends would know that, LLM is large language model. So I think it's still very new. Most people don't interact with it. Google still gets 8.5 billion queries a day. So it's going to be a big beast to take down. But it does seem like AI is moving in the right direction. And all of this goes back to being bullish for NVIDIA, because if there's this much usage of AI, which again, the GPUs mean jack shit unless people are using it. That's the thesis for Palantir. That's the thesis for the software application of AI. You need the users, and it seems like the users are beginning to adopt AI a lot more in the enterprise and in the consumer space. And that's obviously going to be bullish for NVIDIA. Okay, here's our watch list today. We have Ulta, Mongo, Lululemon, Dell. I think Dell is the most important one that I'm looking for, especially after SMCI. If Dell says, hey, we have operating margins of even a couple percentage points, I think the stock does better. If not, I think it goes down. Ulta, I think after Buffett bought it, they're going to have a lot of confidence, and they're going to be like, hey, makeup's going really well and all this stuff. They're going to paint a good picture. So I think that might do well. Mongo, I have no clue. I don't really understand MongoDB that much. I know it's a SaaS company, but don't understand it too well. Marvell, I don't know exactly what this company does, but they are very important in the semiconductor space. Jose came on the channel a couple of weeks ago and told us a little bit more about what importance Marvell has, but it's a $60 billion company. So that one is up on the day, and based on NVIDIA's guidance, theoretically, they should report good numbers. And then Lulu, you guys know I make fun of Lulu all the time. I would love if Lululemon was up 20%. Why? Because I want the economy to stay strong. And if somehow there's people buying $500 keychains with a lemon on it, then I mean, like, God bless the American consumer. So this stock's down 50% year to date. I would imagine that it gets a little bit of help. After you're down 50% year to date, do you really fall another 20%? Maybe. But this is going to be one that we see, and hopefully Lululemon has a good earnings and the consumer is not in a horrible situation. Will Dell add Bitcoin to their balance sheet? If they announce this, it's going to be really fun. I don't think they're going to announce this. I think Michael Dell personally owns Bitcoin. By the way, you guys know that Mr. 100 guy? He bought a crap ton of Bitcoin yesterday at 58,000. I think he bought like 500 Bitcoin, or a little bit more than that. Let me see if I can get that screenshot. But most people are thinking, 500 Bitcoin. Most people are thinking that Mr. 100 is Michael Dell. Maybe. We know Michael Dell has tweeted so many times about like Bitcoin and these mysterious, enigmatic messages. But if they announce it's actually on the balance sheet, that would be crazy, bro. I don't think it's going to happen, but that would be so crazy if that does happen. So we've got a lot of earnings, lots and lots and lots of earnings to talk about and to go through as well. Josh says Lulu is going to dump. Matthias says, I think Lulu is just past its peak, not necessarily because of the consumer, but because the brand isn't hot anymore. Interesting. Okay, so you think it's a brand issue. Josh says, wasn't there news that Lululemon clothes were being sold at Marshall's? If true, not bullish. Yeah, I guess we'll see. Best Buy had a good earnings. They're up 15%. Dollar General had a bad earnings. They're down 28%. So we're seeing the divergence of the consumer. People are just not shopping at Dollar General because they're probably going to Walmart or Target. But people are shopping at Best Buy. There's no way Best Buy's up if the consumer's struggling, because people have to buy stuff at Best Buy for their numbers to go up. But Dollar General, they're just not buying stuff. So again, I think the consumer's being picky, not necessarily the consumer's being weak. And then based on the retail sales data we got last month, along with the GDP data we got this morning, it does seem, I'm not saying the consumer's not in a horrible situation. I'm just saying it seems like they're in a better position than what a lot of people thought. And, the more earnings we get, the more we get to have a better understanding of that overall picture. All right, here we go. Thursday, August 29th. Thank you, everybody, for being here. It is now 4 p.m. The stock market is closed. All right, so before we get into earnings, let's take a quick look at how the market ended. Max 7, Apple goes green by 1%, Microsoft green by 0.5%, Meta basically flat, Google down by 0.5%, Amazon up by 1%, NVIDIA ends down 6% on the day. Tesla, it was at 214, now it's at 206, slightly green on the day. Crypto derivatives, Bitcoin kind of flat on the day. CleanSpark up about 1%. Coinbase down 1%. MicroStrategy up 0.36%. Robinhood down about 0.74%. Iren had a great day, up 14%. Hut 8 Mining up 0.34%. And then if we look at fintech, Square up 2.6%. PayPal up 4%. Affirm up 31%. We talked about that this morning. Really good numbers on Affirm. And then SoFi, nice $8 close on SoFi. I mean, if you're a SoFi shareholder, you can't really ask for more. SoFi right here, $8 up 7.21% on the day. Nice $8 close. Hopefully we can keep $8. And nice to see that. At the top, it was at $8.30 earlier today. Okay, here we go. We're going to get into earnings. I think we should get some of these results pretty soon. MongoDB is moving after hours. Let me start pulling up all the results that I can get. And let's see what we get. Dell and Lulu are the ones I'm looking at the most. Lulu for the consumer, Dell for semiconductor operating margins and just like their overall continued growth. Marvell is up 2%. Let's see if we have those numbers. And then Mongo is going to be more of a SaaS name as well. Okay, so Marvell is the main mover right now after hours, up 2%. Let's see if we can continue getting some more momentum. Marvell for AI, yes, Marvell for AI as well. Okay, so Marvell's moving. Let me pull up this right here and see if I can get something here. We should be getting the results for some of these pretty soon. Do we have any that are out yet? Autodesk. Okay, we have Autodesk. Autodesk. I did not know Autodesk. We have Autodesk earnings that are out. So Autodesk, let me know if anyone owns this. ADSK, they are up 4%. Autodesk beat earnings per share, $2.15 versus $2. Revenue, $1.5 billion versus $1.48. Autodesk earnings are out, and this is the first one of the day they beat. Now they are up. Yeah, they're still up 5% after hours. There you go, up 5%. Okay, so didn't know about Autodesk, but they had earnings, and they are up right now. Did the Fed say anything today? No, not really. Oh, Bostic said something today? Maybe that's why we got that crash at 3 p.m. We saw the market just take a little bit of a turn. I'll find out if Bostic said anything. I feel like I would have known. But if he said something, that's probably what got the Fed a little, or got the market scared. Okay, so Autodesk is up. They beat on the top and the bottom line. Nice to see that from them. Nice 5.72% on Autodesk. So you're seeing some decent momentum right there. They touched 273. Now it's falling a little bit, but still up 3.87%. Ulta, no results yet. Dell is up about 1%. No results. Lulu up about 1%. And Marvell up 0.24%. So we're still waiting for numbers on all of these. They're all green after hours, but still no exact numbers on these yet. Did Bostic say something today? Oh, yeah, he did. He did say something. Well, what did he say? I got to find out what he said. He talked at 3:30. Yeah, I think you're right. That's when the market. What did Bostic say? Interesting. I didn't catch this the whole day, but you're right. He did say something. We'll try to find out what he said. But that's probably caused some of the interesting. Dude, Bostic was pretty bullish before Jackson Hole. This is what happens with these Fed guys. Like, market goes up, and then they have to say something that just messes things up to tamper expectations or whatever. And then the market becomes emotional. It reacts to that. Like, it's a game they play every single time before the FOMC meeting. Okay, Mongo's down a little bit. We got Mongo down about 1%. Markets are falling before 3:30. Okay, so we'll find out what he said, because I did notice that. Like, I mean, just randomly looked at the charts and everything was down. I was like, okay, so something happened, but I had no clue. I just thought it was people taking profits, and in general, algos deciding that they were going to sell off some of these stocks into the close. Gap has earnings. No, Gap had earnings yesterday, I think. I'm pretty sure I'll put it on the list. I thought Gap had earnings yesterday, but Gap right now up 1.3%. Maybe they do have earnings today. Let's pull up Gap. Gap, another retailer as well. That's going to be very important. Yeah, they have earnings. I think they have earnings today as well. Okay, so we'll take a look at them. Housing data at 2 p.m. caused the crash. Actually, I think you're right about that. I think you might be right about that. Housing came in at negative 5% versus 0.4%, but I didn't really think that was that big of a deal, because like we all know people aren't buying houses. Dell is up. Dell is up 3%. All right, we're getting some momentum on Dell. We know rate cuts are going to be important for the housing market, so I didn't think that was that big of a deal, but maybe that's what the market took as more serious. Autodesk up 5%. Dell is up 2%. Now Dell's down. Now it's slightly green. Now it's flat. Marvell's up 10%. Holy crap. No, it's not. It's up 6%. At least on Webull, it's up 6%. Maybe it touched 10% at one point, but it's up 5%. Dell's up 3%. Let's see if we can get those operating margins from Dell. We got to see if they can pull that off. If they can, I think that's going to be very good for Dell, especially after SMCI kind of crapped the bed with what they had your day. Okay, I think I have some results. Do I have some results? I have some results. Well, we have Autodesk. All right, so while we get everything else, let's play the Autodesk results, and I'll start getting everything else. Mongo's up 9%. Okay, here's Autodesk. Let me get the numbers from Mongo and Dell. Let me see if I can pull that up.
Autodesk earnings numbers. Want to get to those. Kate Rogers has them. Kate?
Hey there, John. Yeah, and the stock is climbing by more than 4% on this report for Q2. Beat on the top and bottom lines here. Q2 earnings, $2.15 a share adjusted. That's better than the $2 analysts were looking for. Revenues, $1.51 billion, also higher than the $1.48 billion that analysts were looking for. It also has some guidance updates here for Q3 revenues and EPS. Q3 revenues, it sees in a range of...
Okay, Mongo, we'll go back to that, but on Mongo, I have the numbers. We have 27% revenue growth on Atlas, which is 71% of their total revenue, 13% top line revenue, $478 million. Customer base grew to over 50,000 customers. Subscription revenue increased 13% year over year to $463 million. Guidance of $497 million next quarter. Revenue guidance of $1.93 billion on MongoDB. I think those are really good numbers for the stock. Dell, by the way, up 5%. That's nice. Wow, Mongo 13. Yeah, those are good numbers. Those are good. They deserve it. Lulu's down. Lulu's down. Lulu is tanking now. Lulu's down 7%. Ulta's down 9%. Okay, so the retailers are tanking. Lulu and Ulta are tanking. We'll get those numbers in a second. Dell is up, and Mongo is the one who's leading right now. Mongo crushed. Mongo crushed. Okay, so now we got to get Dell. We got to get Dell, and we got to get Lulu. Those are the ones that matter. Let's see if I can get that. Okay, we got Lulu. We got Lulu. Here we go. Let's get Lulu, and then we'll get Dell. Here we go. Here's Lulu.
Fancy earnings are out. Leslie Picker has the numbers. Leslie.
Hey, John. Lululemon reporting a miss on the top line, a beat on the bottom with comparable sales up only about a third the level that the street was expecting. The athleisure maker generating $2.37 billion in revenue, just shy of consensus. The bottom line beat by 22 cents per share. Gross margins came in stronger than the street was expecting there. The Americas region was a weak spot with comparable sales declining 3%. CEO Calvin McDonald saying in the release that, quote, in the U.S., our teams continue to optimize our product assortment and remain focused on driving forward our opportunities in the market. International comparable sales, more of a bright spot here, jumping 19%, contributing to international revenue growth of 29%. Men's revenue up 11%, while women's revenue growth about half that level, and digital revenue contributing just a fraction of the revenue that's the people generated in stores. The latter was up 11%. That was for in-store shopping. Full year revenue guidance coming in lighter than expected with the high end of the projected range.
Okay, so pretty much everything we thought. The consumer, they're not explicitly saying it's struggling, but they are, they're not hitting their numbers, which means the consumer is not choosing to shop at Lulu as much, probably because they're being a little bit more cost conscious, which makes sense. So Lulu is down 9% now. Ulta's down 8%. Dell is up 5%. So the Dell numbers right there. Thank you for this, Jed, in the chat. Q2 adjusted EPS of 189 versus 171. So they beat by 18 cents, 25 billion versus 24.14 billion. Now, those two numbers literally don't matter until we figure out what their operating margins were, because it's up 5%. I'm assuming because the operating margins were good. So that's what I am looking for right now. If we can find those operating margins, we'll know why it's actually up 5%. Second quarter revenue, $25 billion, up 9% year over year. In Q2, our combined ISG and CSG revenue was $24.1 billion, up 12% year over year, positioning us well for the second half of the year. Our momentum in ISG is a significant tailwind. Where are the operating margins? Where are the operating margins? If anyone knows it in the chat, let me know. This is the only thing that matters, dude. This is literally the only thing. I think it's up. It looks like it's up 1% quarter over quarter. I think they had operating margins of 1%, if I'm not wrong. Okay, well, we'll keep trying to find those. But from what it looks like operating margins were positive, and that's why the street likes it, because they're finally making money off all this AI demand that they have. Ulta down 6%, Lulu down 7%, Marvell up 3.4%. We'll get those numbers in a bit. MongoDB, again, software names. not doing too bad, up 11.22% on the day, gave a good full year guidance. This is just bullish in general for SaaS spending, which is important. And then Dell right here, up 5% on the day. Interesting. So the Buffett buy on Ulta was not enough to get investors to overlook what looks like a potential miss on their numbers. Let me see if I can get Ulta. So we did Lulu, Ulta. All right. So wow, they missed on the top and the bottom. 530 EPS versus 547. They missed by 17 cents. 2.5 versus 2.61 billion on the top line of revenue. Looks like people are not buying as much makeup as we thought, or at least what investors thought. Down 7%. Now, maybe that one recovers. This stock is up, I think, like 20% since Buffett bought. So there's probably also some volatility to the downside just because people are taking some profits after they had some gains after Buffett announced that he bought 266 million of Ulta. But that's not the best for them to miss on the top and the bottom line. That means people are just not buying as much makeup. That's what I would imagine. Dell's running. Is Dell running? Wow, look at Dell. Dude, we got to find these operating margins. Let me see if I can go to their website. This is the only thing I care about. Maybe they'll give more clarity on the actual call. By the way, I was listening to the CrowdStrike call before I got on the market close. I encourage people to listen to it because George Kurtz basically said all the narratives that the competitors are saying about CrowdStrike being dead. He basically said they're all full of shit. And he gave a lot of examples of why. So he was speaking with a lot of energy, just being like, these guys have no idea what they're talking about. And I think that's why CrowdStrike is up a little bit right now as well. Okay, so here's the actual numbers for Dell. What do we have for Dell? Gross margins at 21.5%. That is a little less than last year. Non-GAAP gross margin is down 1%, and overall gross margin is down. So interesting. So gross margins are down 1%. You see that right there? Last year, they were at 5.3 billion. Now they're at 5.38. Now they're at 5.31. It's such a small level, though. Maybe that's why the street doesn't care too much. Operating income is up, though. So maybe that's why the street is excited about that, even if the gross margins are down. We'll get some more clarity on Dell, but it seems like that's what the street is excited about. They didn't really crap the bed when it came to those margins. All right, let's get into Dell. We have some coverage on that, and then we'll get some more numbers on Ulta.
Things are out now. Seema Modi has those. Seema.
John, this is a strong beat from Dell, $1.89 adjusted versus the estimate of $1.71. Revenue surpassing street expectations, but the clear standout for the company is servers and networking revenue of $7.67 billion. Estimate was for 6.3. CEO of Dell referencing the momentum in infrastructure solutions group and how that is a significant tailwind for the business. We're expecting guidance on the call, which begins at 4:30 p.m. Eastern. Of course, Dell in a highly competitive market in the AI server market with Supermicro and HP Enterprise, looking at Dell shares up 4% in overtime. John?
All right, Seema, thanks. We got another name moving higher as well. MongoDB earnings out. Kate Rogers, how do those numbers look?
Hi again, John. Yeah, you can see that stock is higher by around 11% on this better than expected report. Q2 earnings, 70 cents adjusted, higher than the 49 cents that analysts were looking for. Revenues also a beat, 478 million, higher than the 464 million that the street was looking for. Also raised its guidance range here for Q3 revenues, now in a range of 493 to 497 million, better than the 479 million estimated. Also sees EPS of 65 to 68 cents. That's also higher than the 60 cents estimated by analysts. The company's CEO says, we believe we are incredibly well positioned to help customers incorporate generative AI into their business and modernize their legacy application estate. The CEO will also be on Money Movers tomorrow for much more on the quarter. But as you can see, that stock is higher by more than 11%. Back over to you, John.
Sounds like that.
Okay, so we got some action after hours, a little bit of a mix up here. So Ulta was down 10%. Now they're down 2%. People are buying, or sorry, not Ulta, Lulu. So people are buying the dip there. Ulta still down 7%. Dell up 7%. Mongo up 13%. Now Dell, I'm not getting the operating margin number because it's not on the press release. And the reason I can confirm that is because I Command F'd operating margin on Ulta, and I'm getting their operating margin. Dell just didn't put it there. There you go. Operating margin. Very easy to find on Ulta Beauty on their investor update. Dell did not put it there. Maybe Dell did not really want to make it as obvious because they know that's the number that everyone cares about. But I'm sure we'll figure that out pretty soon. If anything, it looks like it's 1 or 2%. But even if it's 1 or 2%, that's enough. Even if it's like 0.5%, at least that's progress from 0% last quarter. So this is Ulta's numbers. Sales decreased 1.2%, 2.6 billion versus 2.5, and the net income of 252 million on the year. Here's what Dave Kimball said, CEO. While we are encouraged by many positive indicators across our business, our second quarter performance did not meet our expectations, driven primarily by a decline in the comparable store sales. We are clear about the factors that adversely impacted our store performance, and we have actions underway to address the trends. Interesting. So far, he did not say anything about the consumer. Nothing about the consumer. He's taking responsibility for it. He's saying, we know why we messed up, and we're going to take responsibility. He is not blaming the consumer yet. He then says, we are focused on driving stronger sales and traffic, continue to exercise financial discipline. In light of our first half trends and a more cautious outlook, we have updated our full year expectations. That means they lowered guidance. I remain confident in the power of our differentiated model, the strength of our financial foundation, and our ability to deliver value for our shareholders over the long term. Very interesting, bro. Nowhere in that paragraph is the Ulta CEO saying, hey, the consumer is not buying makeup. And he probably doesn't want to say that, because then the stock's definitely going to tank if the consumer is in a horrible situation. So maybe they're trying to avoid that and say, hey, look, we have our own issues. And honestly, you can't really lie about that, because if the consumer is not buying it and you just like sugarcoat that, the next quarter, if the consumer is really in a bad situation, you're done, right? Like their stock's just, you're dead, and now you have no explanation now other than the consumer. So you'd rather warn against that. So it seems like he's doing the Lowe's approach, which is taking responsibility, not blaming the consumer, and saying that they're going to fix it. Dell is up 7%, MongoDB up 15%, Ulta down 7%, Lulu recovering a little bit, Autodesk up 4%, and then Marvell up 4% right now on the day. Not bad. Not bad at all. And we're seeing some decent momentum. Let's go to Lulu's page and see what they have to say. Interesting that people are buying the dip on Lulu. They're not letting that one continue to fall. 10%. So Lulu revenue, 7% increase to 2.4 billion. CEO says in the second quarter, Lululemon delivered revenue and earnings growth with ongoing strength across our international business. In the U.S., our teams continue to optimize our product assortment and remain focused on driving forward our opportunities in the market. We feel confident in the long-term runway. America revenue increased 1%. International revenue increased 29%. So you've got international people buying Lululemon clothes. Gross profit increased 9%. That's not bad. Gross margins increased 80 basis points to 59.6%. Income from operations increased 13%. Operating margin increased 110 basis points. This is another company that easily, if you Command F, you can see operating margin. Again, on Dell, they're hiding that operating margin number. But that one is up, which is really good, at 22.8%. And they opened 10 new stores. Now they have 721 stores in the country. Not bad. Not bad, dude. That's not too bad. I mean, those are pretty strong numbers. It's not as great as the street would have wanted it, but it's not horrible either. Let's get another update on Ulta, and then we'll keep going from there.
On the top and bottom lines, and cutting its guidance for the rest of the year. EPS coming at $5.30 a share versus the $5.46 that analysts were looking for. And for sales, those came in at 2.55 billion, and analysts were looking for 2.6 billion in the quarter. And for the rest of the year, they're also trimming their outlook, and they're saying that they are not satisfied with their performance here in the second quarter. Primarily their miss on same-store sales. Those were down 1.2%, and analysts were expecting those to be positive 1.2% in the quarter. That stock down about 6.8% right now, and we'll keep an eye out. John?
Angelica Peebles, thank you. Mike Santoli, I mean, this is ugly. From Ulta. And it's weird because for a while there, the makeup business seemed kind of unflappable. People wanted to get back out. They were outside. They were buying.
That is a hell of a word. Unflappable. What does that word mean? Unflappable means having or showing calmness in a crisis. Unflappable. All right, folks, we're definitely going to be using that word. I like that one. I like that word. We'll get Marvell results right after this.
Makeup. Now you got to wonder, you're seeing the spotty performance. TJX on the lower end did really well. Dollar General did not. Here we have Ulta Beauty stumbling where it used to be strong. What's the takeaway, if there's any through line here on consumer behavior?
Yeah, it doesn't seem like it's the overall category. Sephora is apparently really stealing market share from Ulta at this point through Kohl's, the partnership there. And, Amazon, everybody seems like, there was a former category killer, which was Ulta, and it's just broken stride. And both Ulta and Lulu acting exactly like the busted growth stocks that they were set up as, where they kind of, missing estimates, having to guide down on comps and guidance. And, even though the multiples look cheap relative to where these stocks used to trade, they still have just a lot to prove in these instances. So I'm a little hesitant to take a macro influence from what Ulta had to say in particular about makeup without knowing if it's just these competitive dynamics.
Yeah, maybe more of an issue kind of like Lulu unto itself.
Yeah.
Meanwhile, back to the chips. Marvell earnings are out. Seema Modi back with those numbers. Seema.
All right, here's Marvell.
John, numbers from Marvell basically in line with expectations. 30 cents adjusted. That was exactly in line with what Wall Street was expecting. Revenue of 1.27, a slight beat of 1.25. Revenue guidance for the third quarter, 1.45 billion. The Street was looking for 1.4. We have comments from Matt Murphy, the chairman and CEO of Marvell, talking about how strong demand for AI really helped the company drive quarterly revenue. And that next quarter, they're expecting combined enterprise networking and carrier end markets to return to growth, while our data center end market growth accelerates. Looking at the stock up about 4%. It's been an underperformer this year, John.
All right, Seema, thank you. Barbara, looking at Marvell here, this is one of those names where, they're in data center, they're also in autos, and the idea that the telcos are rebounding for them might seem hopeful across a number of fronts. It's sort of been the stock stuck in neutral for a while.
Yeah, I think it's because they've got a mixture of the cyclical businesses, the networking, the enterprises, the auto, which have really, and the question is when it would bottom. And a lot of investors are expecting this could be the trough quarter, and it sounds like management is saying, hey, we should start to see a pickup and stabilize. And of course, the growth area, the more secular related, is the AI area, but is only 22% of sales, and it should increase, but it hasn't been enough to offset the growth. So if they are troughing in their cyclical business, this stock could now have legs and could do a lot better in the second half.
Yeah, I would agree with that, dude. I don't know a ton about Marvell, but the stock itself has been relatively flat, and investors have probably been looking for that kind of breakout growth quarter. And it's within expectations. It's not some massive NVIDIA quarter, but it's enough for the Street to get a little excited. Maybe some of that money from NVIDIA going to other names as well, like a Marvell, up 6% on the day. Mongo up 15%. Mongo just crushed earnings, dude. I mean, the guidance increase, beat on the top and the bottom line, going down a little bit right there. We see the red candle, but even if it ends the day up 5 or 7%, it's at 14% right now. You got a decent margin of safety before the call for them to continue to put up good numbers. Dell right here up 8%. Again, no announcement of Bitcoin, so we don't know that, but it is up 8%, which is nice. Most Street firms have a target of 160 to 180 on Dell, and that's all based on that operating margin going up. And no full number yet of operating margins, but outside of that, Dell beat on the top and the bottom line, and then Ulta with the worst earnings of the day, down 6%. But Ulta and Lulu both are not blaming the consumer. They're just not. They're just not right now, and I think that's very, very important. Is Accenture CEO on CNBC? Okay, let me go to her. She's this is Julie. Okay, so I like her. She works with Palantir. I mean, Accenture, not she, but Accenture works with Palantir. She's talked about their partnership a while ago. Let's hear what she has to say about AI demand. This is actually really important. And the reason this is important is because Accenture is one of the biggest consulting firms outside of Deloitte and KPMG. They work with hundreds of thousands of clients implementing their AI strategy. So it makes a lot of sense that they would see some AI demand tailwinds. And if they're saying, hey, we're seeing AI demand as a consulting firm, you would imagine other companies are seeing that as well. This is also with Thomas Kurian, the Google Cloud president, together with her.
That you were seeing, how does that compare with the uptake now from Gen AI and the legs that this might have?
John, I would say it's quite comparable. You'll remember that at the time because of the needs of the pandemic, we went really fast and everybody, ran to being remote. And that was an incredible time. What we're seeing with the adoption of Gen AI is that CEOs are listening to the advice that debate at your peril. Let everybody talk about, is it real or not, but get on with it. And so the advanced business leaders are actually getting on with it. Like
this is important, bro. She talks to probably hundreds of C-suites a week. And if her argument is that it's time for them to embrace AI, this is very bullish for Palantir and very bullish for enterprise AI adoption.
For example, just like real examples are healthcare coverage. We've all had to get approval for some kind of a procedure. It can take days, weeks even, because there's so much involved, codes and documentation. We're live together with Google with a leading healthcare coverage where it's gone to minutes, right? That's affecting thousands of people. It changes the experience. It makes them more competitive, and it gets patients to getting the care faster. So I'd say very similar in terms of speed, but the impact is even greater because it's actually getting at solving real world problems now at scale.
Interesting. Thomas, you mentioned Radisson Hotel Group, I believe. You're saying that by using AI, the productivity in their ad teams has been boosted more than 50%. Tell me, if you can, about that measurement and how long that can continue, because that seems like an awfully large boost.
Thomas here is from Google.
Yes, most importantly, the ads that the team used our platform to build, along with Accenture, are seeing 20% higher conversion. So the business value came to them from two dimensions. One, when they placed the ad, they saw a 20% lift in conversion. Second, when they created the ad, because the tools are now so effective at creating an image, generating the image, creating the copyright, like the documentation, the print that goes with it, translated into many different languages.
Dude, that's cool. Basically, a team of people you would need to make an ad, copy images, etc. You're doing with AI, translating it into hundreds of languages and then deploying it. That you could imagine the efficiency gains on that. And then if the conversion is better, I mean, it becomes a no-brainer at that point.
And because you can run many experiments, you can find the right creative content that improved the speed with which they can do it by 50%. So it's a hit on the improvement on the productivity and improvement on conversion. We see that in many, many other domains, whether that's in the back office, how we're helping cybersecurity teams improve the speed with which they can find threats, meaning scaling the productivity of the teams, but also protecting against risks. There's many things like that that we're seeing across our clients.
Julie, when you see these kinds of results, both for Accenture itself and I guess more importantly for your clients, doing work faster, the work that they do is more effective, what is the therefore? What's the next step? Is it we don't need as many people to do this work? Is it that we're taking on additional?
Oh, this is an important question. I wonder what she says here. She's definitely not going to say we should lay people off. So let's see how she responds to this.
Projects now to gain share, perhaps, or does it sort of depend on what the macro environment is telling them?
Actually, John, if you just take a step back, I'm more excited about what it tells you about the future in terms of what you can do really strategically. So the examples we're giving you right now are pretty much table stakes, right? They're changing experience, they're changing productivity, all super important. But the promise of the technology, right, if you fast forward 3, 4, 5 years from now, is that this technology is only going to get better, and you're going to start producing new medicines, new types of materials. You're going to create chemicals and ways of changing the climate change and things you're going to do in oil and gas and in renewables. Technologies that don't exist today. And so it's really important as a CEO that you're looking at, there's table stakes, and the way I win is I go faster than everyone else. I'm in the cloud, I've got my data, and I use AI. And at the same time, I look forward because I realize that the therefore is that I've got an opportunity to actually change the core of industry. And that's what we're talking to boards about. That's what we're talking to CEOs about. Thomas and I are saying, like, this is real now. And if you're the first, you'll get an advantage. And even more importantly, you're going to be able to actually change industries.
Okay.
This is kind of what the Dell CTO said the other day, that AI is bigger than the internet because it's moving so fast. So Accenture, which is a consulting firm at the end of the day, by the way, put in the chat if you're a consultant. Lulu almost going green on the day. But Accenture hires a lot of people. Like, I think Accenture has 100,000 employees. So she kind of avoided the question there in terms of laying people off. She kind of just said, well, there's all these new opportunities and we have to look at those. Accenture stock down about 2% year to date, over the past year up about 6%. But Accenture does employ a lot of people, and a consultant, from my understanding, is someone who is able to critically think, and you get paid money for your critical thinking skills and helping solve problems at companies. Lululemon now going green. So I would imagine AI is a tailwind to help companies for Accenture's business, but it's not literally replacing employees that are supposed to be some of the smartest people that go into a company and resolve problems. AI would just help them resolve those problems. Wow, Accenture has 733,000 employees, bro. Holy crap. Yeah, so I mean, I think they're seeing AI as a tailwind more so as a thing that's going to get rid of their employee base. I mean, I'm assuming some people will get laid off, but I don't know if they're firing, hundreds of thousands of employees at the end of the day. Lululemon going green somehow. Looks like Ulta's the loser of the day. Dell's up 7%, Mongo's up 14%, Dell's down 6%, Marvell's up 5%, Autodesk up 5%. Lululemon basically flat on the day, slightly green, which is not too bad. Accenture's green in the DC area. Yeah, that is true. I had some friends when I was in college, senior year, that worked at Accenture. I never chose to go down the consultant route. I kind of started my own consulting firm technically, so I guess I did go down the consulting route to an extent, but never worked at a major corporate as a consultant. It's an interesting job, interesting lifestyle. The pay is good. I don't think the pay is as good as working in tech. It's definitely not as good as working in like investment banking, but I think if you become like a senior level consultant, then the pay is decent. But at the end of the day, if you're a consultant, you are like McKinsey, or like you're trying to solve problems for your clients, and you're making a lot of PowerPoints, and you're going through pitch decks, and you're trying to figure out how do we add value to a client's strategy. Like Coca-Cola will come to Accenture. They'll be like, hey, we can't figure this marketing shit out. Can you help us out? And they'll give the best Accenture marketing consultants, and they'll try to devise a strategy. They'll charge $1 million, and then they'll present the strategy, and then boom, there you go. So when it comes to AI, if Accenture is starting to deploy AI as a strategy, for example, in Coca-Cola's marketing department, then that's a piece of momentum that you'll see as well. Like, for example, when Facebook was going through that Cambridge Analytical stuff and they had to figure out the PR, I am sure Facebook went to like many consulting firms around public relations, and they were like, how the hell do we tell everybody that we stole their data, but that it's not that big of a deal? And they figured it out. And whoever consulted them to get Zucks to start wearing a gold chain or whatever, like, it worked. So all of that ultimately is a big, big business that I think AI is going to be a tailwind for. Dell is still up 7%. Ulta is down 7%. Lulu, wow. The lemons are not yellow. They're green, folks. That was good. I just came up with that on the spot. That was good. Lululemon with some green lemons up 2.7%. There you go. Lululemon is green. Lululemon is indeed green. Wow. Ooh, that's not bad. That's not bad. Is Dell down? Dell's still up 6%. It's a little bit of red candle there, but it's up 6%. Right. That's a lime. Oh, damn. I should have made that joke. That's a lime. That would have been so much better. So guys, I have to leave at 5 o'clock, so I can't stay for the whole earnings. Do you guys want to listen to Dell for the next 25 minutes? Because I have to leave literally at 5 o'clock. So I would have to leave at 5. That's the only problem. Or maybe I can keep the stream going, but I just wouldn't be. No, I definitely can't keep the stream. No, I have a meeting at 5. So let me know if anyone really, really wants to hear the Dell earnings call. If not, you could hear it on your own somewhere else. The only thing that matters in Dell is the operating margins. That's it. Can you take us with you? Unfortunately, no. This is I have to go to a different meeting. Yeah. Okay, so we're not going to play it. Because I have to leave in the middle anyway. So if you want to listen to it, you can just go to the Dell IR website and listen to it there. It's not that hard to listen to. I'll put it in the chat right here. So if you want the link, this is the link in the chat. You click on this and you can get to the call. But I'll listen to it tonight. I listened to CrowdStrike. I want to listen to Dell as well, and then keep going from there. Okay, so that's what we have for earnings. Lululemon goes green. Dell goes green. Ulta goes down. Lululemon, wow, 3%. Holy crap. I kind of felt it would go green after being down 46%. I was just a little nervous about how much how much people are actually going to buy this expensive stuff, but they put up some decent numbers, not amazing numbers, but definitely not horrible numbers. Ulta was just horrible. Ulta was horrible numbers. And then Marvell up 5%, Lululemon up 3%, Gap is up about 0.5%, Autodesk up 5%, and then Ulta down 6%. So every company today that had earnings put up really good numbers, and they're being rewarded right now, Mongo being the biggest one, up 15% outside of Ulta. I think that's a good wrap to Q2. I think that's a hell of a good wrap to Q2. That is not a bad wrap to Q2. And there you go. That's what we got on earnings. All right, cool. I'm going to go through some other headlines that we saw in the market today, but those are pretty much what we had in the context of earnings. And then I just have to be out at 5 o'clock, so we'll end it a little early today. But that's what we have. Elastic had earnings. Okay, I don't even know that this was a company, but let's get their update. I'm going to look at what Elastic is, because apparently that's a company. So I don't know. All right, we got one more company. Here we go.
Elastic just reporting first quarter results. The stock is falling off a cliff. It is down about 24%. Search software company beating on earnings at 35 cents per share versus estimates of 25 cents. Revenue also beat at $347 million versus estimates of 345, but revenue guidance was weak for the second quarter and for the full year. And check out NXP Semiconductor announcing an additional $2 billion stock buyback on.
Okay, so Elastic's down 23%. Here's the website. I'm sure some of you guys know this thing. I've never heard of this. The Elastic Search AI platform. When did this go public? When did this go public? This went public in 2018. It's up 48% all time. Year to date, it's now down about 30%. Never heard of it. Never heard of it. Okay, so some of you guys don't know it either. It looks like a SaaS company that is obviously trying to help businesses make sense of their data. The Search AI company. I have to do some research on this one. Get relevant results at unprecedented speed with open and flexible enterprise solutions. It kind of looks like it takes all your data and makes it searchable, kind of like a Google for the enterprise, with security and observability and all that good stuff. And obviously RAG with retrieval augmented generation. I mean, if you're searching through stuff, LLMs is going to be a big tailwind. I don't know why this thing has a moat or why it's unique or anything like that. And maybe that's why it's down 23%. Trusted by 50% of the Fortune 500 to drive innovation. Dude, this is why enterprise companies get so much momentum. Like selling into the enterprise, once you're in the Fortune 500, the amount of software spend is just insane. So I think we're just at the beginning of what Palantir is going to be able to do. But okay, this one missed on the top and the bottom line. They are down 20%. I'll do some research on this one. I have no idea what this company is. I found out about it today. Market cap 10.5 billion, price to sales of 8, PE of 800. I mean, if it's not that exciting of a company, paying a PE of 800 is a little aggressive unless the growth is better. But if the growth was better, I don't think the stock would be down 24%. And you got it down 24%, 102 million shares outstanding on Elastic. Affirm's up over 30%. Yes, so Affirm had a great day. Okay, so let's do a couple things. Let's run through a couple final headlines, and then I'll get you guys out of here. First, I didn't show this video that I was supposed to show in the morning, and that video was about Palantir that was talked about on CNBC yesterday. Some of you guys might have seen it. Some of you guys might have not seen it, but here was one of the analysts during the halftime show talking about Palantir. Then we'll talk about NVIDIA, Affirm, and Best Buy to round it out for today.
Palantir. I'll let Joe hit it too, but you go first.
Okay, I'll start.
Palantir is up 22% since August 5th.
And then you can close. You can be the closer.
Let's do it. Right.
So, okay, we talked about software earlier. If you want to talk about software, AI, and execution, Palantir. This is, like, to me, the only company that's actually taking all this, nebulous conversation around AI and actually executing. And I think that this was it's still a very under-owned name. The institutional ownership has increased. But I think historically people thought this was a government contracts with the 3-letter agencies. Now all of their growth is coming from corporations taking their internal databases and having Palantir saying, hey, this is what you can do better. And I think it's early days for this company on the corporate side. And so this to me continues to be like one of the names to own if you want to have a great AI company that's actually monetizing what everyone's actually talking about.
The execution in terms of pivoting from having a revenue-oriented focus from government towards the commercial segment is absolutely remarkable. I've said this over and over again. This is the most underappreciated AI adjacent name within the marketplace. It's proven itself in an environment where the rest of software appears to be challenged. It's standing above all of that, and it's delivering, and it did that in the last earnings report.
Okay.
Talk about a hell of an endorsement from CNBC. I mean, when's the last time you heard these guys talking about Palantir like that? Who was that yelling? It was probably someone in the background of the New York Stock Exchange. I don't know who was yelling, but someone was probably happy. I will be on Twitter Spaces today at 6 p.m. So every Thursday we do a tech talk. If you just go to my Twitter, link in the description, I'll be live on Twitter Spaces from 6 to 8 p.m. So I thought that endorsement was really interesting. Think about what she said. They are the only company that's monetizing what everyone's excited about, aka AI. And then you had the guy at the end basically say the transition from government to commercial. Remember 2 years ago, the fear was Palantir is too overweight government, not enough into the commercial. That is obviously switched in terms of just growing commercial momentum with the boot camps, et cetera. By the way, I talked to a guy who attended a boot camp today, and he basically, I talked about this further in the Daily Palantir episode that'll be out in a couple hours. But basically, he said everything you heard on the earnings call about time to value is what his company experienced when they were at the boot camps. So that boot camp go to market, very important. It is crucial for Palantir to be able to continue scaling those. And it seems like, going back to that media thesis I had a couple of weeks ago, the media is going to keep talking about Palantir. You get more people like that we just heard on CNBC talking like she's talking, like Dan Ives is talking. You're going to get a lot of people excited about Palantir, especially if AI is what everyone thinks the alpha is going to be in. I think that would end up coming from Palantir. So that's what we got in the context of Palantir. That's what I wanted to show today that I wasn't able to show this morning. The guy yelling owns Snow. Well, where's Snowflake right now? So TJ and I rolled our puts yesterday on Snowflake. Snowflake at 114. We had 118 expiring puts on 8:30, which is tomorrow. We rolled it to 117. The market paid us $600 to do that roll, or like $690. And now we have to wait until next month and see if Snowflake's above 117 to get out of those puts. So we'll see what happens. I do think Snowflake has been hurt pretty badly, bottomed at 109. If September we enter into a 4% drawdown because the whole market's bad, Snowflake's probably going under 100. Palantir is definitely going to be under 30. We'll see what happens in September. But if we avoid that, then hopefully things aren't too bad before we get into the latter part of the year. Let's do some other headlines in the context of macro. So Affirm, main thing about Affirm that was really important, similar to what I said in the morning, I don't understand how a buy now, pay later company is thriving if we're getting an upcoming recession. And the reason for that is because buy now, pay later doesn't make sense, because people aren't going to be paying later if they're defaulting and they're having all these delinquencies in a massive recession. So the fact that Affirm is what you're looking at, up 31%, A, that's bullish because rate cuts are going to help them. B, fintechs are catching a little bit of a bid. And then the market feels people will do the pay later part. By the way, Affirm reported on their earnings that they are being paid more than what they were a year ago. So they're seeing the growth and momentum of the loans actually being paid back in a meaningful way. This is congruent with SoFi that had their delinquencies peak in March. And ever since then, it's been going down. SoFi right here at 804 after hours. Nice to see that it's still holding $8. So from that perspective, I think it's pretty bullish for Affirm. I think it's bullish for the macro. And I think given the GDP data we got today, that also makes sense in the context of what we're seeing for why the market is betting on those names. Upstart, another company that's going to benefit off interest rates. They were up another 1% of the day. I think they're up 80% over the past month. This one I don't understand as well. I do know interest rates are a massive tailwind for them because they're essentially dealing with insurance and underwriting. And there's like some AI narrative on how they're helping that process become more efficient. But it seems like the market is willing to give the SoFis, the Upstarts, the Affirms a little bit more momentum with rate cuts on the way, because they also don't think we're heading into a massive recession. Amit, where did you go to learn how to roll your options? Honestly, with TJ. I learned from TJ. So if you tune into the market open tomorrow, TJ and I will go over puts, calls, and how to roll again tomorrow. We usually go over all the basics every single Friday. So we'll look at the public portfolio, see what moves we've made. We had some HIMS puts, we rolled some Snowflake puts, but Robinhood really makes it easier. So if you are getting into those options, or even if you're just paper trading, I think Robinhood helps you understand it a little bit more as well. Okay, let's finish up on the macro. This is Cameron Dawson and her thoughts on what's going to happen in 2025, and then we'll talk about NVIDIA.
Stock strategies. What's your best one right now? Let's ask Cameron Dawson, Chief Investment Officer at New Edge Wealth, here with me as you see it, Post 9. Welcome back.
To see you.
What do you make of the price action first and foremost? Post NVIDIA earnings, what that stock's doing, and then what the rest of the market was doing and is now doing as we begin our conversation.
Yeah, the whipsaw is something that we've been expecting to continue to see simply because we still are in August. It still is light trading, and this is a time that we typically see higher volatility. Clearly, we are hitting some pretty formidable resistance when it comes to the S&P 500 at the July high, and getting over that is a really important step for this market. So until we do, we just expect to see more chop and churn.
5,600 is sort of that number you're talking about. 5,667 or so is where you have to get a new high. Tech's been teetering a little bit, hasn't it? And do you feel like that's kind of where we are? We're still yet to resolve the future of that trade, at least the immediate future?
Tech has certainly been losing steam. And if we look at the bounce off of the August lows, it hasn't been nearly as robust as the rest of the market. It still is well below its July high, which means that it's making a lower high. We've seen it trade now below its 50-day moving average, I think, today. You also see some of that relative performance starting to deteriorate, which just suggests that some of the ultra dominance that we have seen in tech really over the last 18 months is starting to show signs of fading, or at least a little bit of losing energy, and meaning that the rest of the market has to take it up in order.
Which means we broaden. And I think that's a good thing. That's why SoFi is getting momentum. We need to have more broadening
for this market to continue to move
And
higher.
it kind of has been doing that. So isn't this good, right? If people argue, well, the market needs to broaden. It's not broad enough. It's back towards mega cap tech. And that's really the only thing that's really, really working and that you can believe in. Then you get broadening and tech sort of takes a bit of a backseat, and they don't like that either.
What we'd say is that tech has to at least participate on average with the market. It can't be down and it can't be lagging significantly, because after all, it is 30% of the S&P 500. So that would be a big drag on overall performance. We think that the reason you've seen this broadening is because this expectation that the Mag 7 is going to see lower earnings growth in 2025 than it did in 24, whereas the market now expects the rest of the market, the 493, to see a big acceleration next year. The question is, can the 493 deliver? And we think that that remains a very much open question.
Well, because you need to see what earnings do.
Exactly.
That's going to be the tell. Are you confident or not?
We think 2025 estimates are too high. It doesn't necessarily mean that the market can completely lose steam and mean that we've hit a high in the market. We think that we will eventually start to see those estimates move lower as we get closer to 2025. And we think the fact that there is such a high bar for this 493 is something that makes it harder to jump over. Remember, at the beginning of 2024, the market expected a broadening as well, but it didn't get it because earnings disappointed in things like energy and materials and tech and healthcare and industrials on down the list. Tech was the only place that was surprising to the upside, hence tech's leadership.
Are you bothered by what some would characterize to be a more defensive nature of the recent price action in the market? Utilities and some of the other more defensive, traditionally areas of the market had been leading. Is that a bad thing?
Classic intermarket analysis would say yes. If utilities and staples and healthcare are leading, it's a sign of risk aversion and people having more growth fears. So if you see that performance continue, it is a sign that there is an underlying growth fear in this market that we shouldn't ignore. Also pay attention to things like IPOs and high beta stocks underperforming. That's the opposite side of that trade. And that has been showing weakness, which suggests that there is some brewing growth fear.
And by the way, that's not bad. That just means people are not going to dump all their money into NVIDIA and Microsoft anymore. They're going to chill out and they're going to buy some other stuff, which it's not bad if other companies go up, even if tech is 30% of the S&P. And so that gets me to the final topic of the day, which is NVIDIA. So I talked about NVIDIA ad nauseum. I've not used that word in a while, but ad nauseum this morning. So if you want to watch the market open, it's in the chapters. You can get more of my perspectives on NVIDIA. But my real take on NVIDIA today, the conclusion I came to, is that maybe it's time for us to be done with all of this NVIDIA anxiety. I mean, stock's at 118 right now. The screenshot was when it was at 121. I hate that the market is dependent on one stock every 90 days. And I think today, after this performance where NVIDIA did not have a bad quarter at all, but definitely didn't have a quarter that was so astronomically amazing that it deserves to be up 40%. that the market just chills out and they're like, all right, NVIDIA matters. They're important, but like there's other stuff that matters. AI is real. We get it. But like it's not NVIDIA or bust every single 90 days. And so my perspective here is that if you're in NVIDIA, now you're betting on $5 of EPS growth with a good 40 to 45, call it 35 multiple in 2025. Or if you get $4 of EPS, that's where you get 30 to 25 to 30%, even 40% upside on the stock currently. And that's where you get to the $4 or $5 trillion market cap. And that's what you should be betting on. I don't think you're betting on NVIDIA right now to go to 10 trillion. And if you are, then that's a long-term horizon and it's going to take time to get there, but it's not going to be like, 100 billion to 3 trillion. If you were in it, congrats. If you weren't in it, you missed it. But if you want 3 trillion to 5.5 trillion or 4 trillion or 4.5 or 6 trillion, that's what I think you're in it for, which means you need to then at that point adjust your expectations, understand what the AI CapEx spend is going to be, and then also realize that the stock is already up a lot this year. We need to avoid a recession and we need the market to broaden in order for there to be investor capital and interest for NVIDIA to continue going higher. That doesn't mean NVIDIA is not going to be as important as it was yesterday. But I think in the next 90 days in November, when they report, if NVIDIA is not like the only thing we care about, which it probably still will be, but if it's not like as heart palpitating as it was yesterday, then I think that's good, dude. I think that's really good. And we get to kind of move on from the broader pain or upside that you get from NVIDIA. Because at the end of the day, it's important, but it's not literally the whole stock market. And so that's my perspective there. I think the earnings were great. I don't think it's a bubble. I think selling cash puts the scale into a position at that 100 to 105 range. You're getting paid a decent premium right now. And that's how I would approach it if I was initiating a position. But I don't think NVIDIA is in any massive trouble. Dell is now falling a little bit. So probably on the call, I bet you on the call, they just said, so what are the operating margins? And Michael Dell is probably like, well, they're negative. And then boom, the stock probably just went down. So it's down about, it's still up, but it's down from, it was up 7%. Now it's up 3%. Apparently the CIO of Dell, someone said in the chat, retired this morning, which is interesting. I don't know if that's good or bad. I'll have to do some more research on that. But yeah, someone left Dell this morning, someone who was part of management. So regardless, I mean, look, this is a question about operating margins. I've kept saying that about Dell. If it's tanking right now, it's probably because the street's not getting the type of guidance they want on those margins. Again, that's why I said the EPS and revenue numbers when it was up 8% really don't matter until we get that number. I'll listen to the call tonight and try to get some clarity. But if you're in Dell, that's the only number you should care about. Now, SMCI has had a little bit of recovery today, up 1.2%. SMCI, though, has been a total collapse. This week, it's down. I mean, look at this red candle, down from 729 to 487, rebounds to 619, then all the way down to 395. Really not that much of a rebound today, but you got a little bit of a rebound. So SMCI and Dell kind of playing in that same world. Again, SMCI margins are 11%. So if Dell's are lower than that, which I think they are, both these companies are going to be in the doghouse until they increase their margins, not increase top-line growth, because top-line growth is good. So that's kind of what you got to look out for when it comes to Dell. And we'll see if that plays out. Amit, do you believe SoFi will be above 10 at the end of the year with rate cuts coming soon? Dude, I hope so. If it is, my options are going to make a lot of money. $10 is very psychologically tough. I think that the rate cut definitely should be able to get it to 9. That's been my price target. And then if it gets to 9, FOMO should come in a little bit. Like I think we saw FOMO today on SoFi because so many people who have been in this name for so long, they saw it finally move up and they were like, you know what? It's $7. Like, why am I freaking out about $7? Let me buy another 10,000 shares or 5,000 shares or 2,000 shares, whatever. And you had some more momentum on the name. Still at $8. Again, is SoFi theoretically expensive and cheap? It all depends on how you value a bank or a tech company, whatever. But just like looking at the stock itself at $8, you're going to get a lot of people that don't give a shit about if it's a bank or a tech company. And they'll be like, $8, I'm going to buy 10,000 shares right now, right? Or I'm going to buy 2,000 shares. Like they're just not going to care. So yeah, I think I can get to $10. If the rate cuts are super bullish, they're gap profitable, they're growing, they're in an uptrend. Like there's no reason I think they shouldn't be able to breach double digits by the end of the year. But I think it'll be based on the narrative that accompanies them. But the rate cut, if we get 75 bips, that's going to be very bullish for Q4 and Q1 2025. And so the market should price that in. And I think SoFi should be better. But if the tech company or the tech part of the business really doesn't show any growth or the narrative about that is really bad, then you've got to weigh that against the lending business starting to do well. Amid red September, or green this time for a change. If I had to bet, I would say red. It's been red for the past 4 years. I'm not going to go against the trend. I just don't think it has to be down 10%. We've got really good data. If September 6th, somehow we have an amazing, which I think we will have a good unemployment report, maybe that somehow makes September less volatile to the downside, even if it's still down. But we got through NVIDIA. We got through Q2 earnings. We got through GDP numbers today. We got through the carry-in trade. That happened this month. We got through that. The only thing left is unemployment, which is going to be a monthly thing. But if that doesn't keep reaccelerating, I think the rest of the year is going to be pretty good. So that's kind of my thoughts on how we end out the rest of the year. All right. I guess we'll see what ends up happening. Thomas says, IDK, if these first couple rate cuts are going to help much, they're priced in and out. All eyes on a recession. Yeah, I agree. The rate cuts are priced in. My argument is not the rate cut will help the market. My argument is unemployment not rapidly increasing will help the market, because then the rate cuts become a legitimate tailwind on a no recession economy, at least for the next 6 months. And so rate cuts aren't bullish if we have a recession, because it doesn't matter. Like, you cut by 25 bips, we're not going to see the impact of that for like another year. It's not like businesses are going to be like, oh my God, it's so amazing, we can start borrowing capital and like, no, it's going to take time. Unemployment is definitely not going to get better if you cut by 25 bips. And the catch 22 is if it gets really bad, the Fed's going to cut by 100 bips, and then they're going to be admitting they failed, and then everything goes to crap. And then you get a recovery, but you get a recovery with a lot of pain, because the Fed's admitting that we have to cut really quickly because things are going bad. So 25 bips is what is appropriate. It's what's needed to stop the labor market from getting as bad. And if we don't have a recession, those 25 bips will actually matter, along with the next 50 over the next couple months. And I think 2024 ends out in a good situation. And so let's see. Let's see what happens. Douglas says no on a SoFi short squeeze. It's shorted, but not overly much. So 190 million shares are short of SoFi. I kind of think that's a lot. It's 19% of the float. It actually went up. By the way, Palantir's float went down. Yeah, here the dude is more than 190. It's 192 million as of August 15th. So unless that went down over the past 2 weeks, which even if it did, I don't imagine it went down that much. There are almost 200 million shorts, shares short. 20% of the float almost is like today. You have to ask yourself, did those 192 million shares, did they flinch? Did they get scared? Did they cover a little bit, or are they doubling down? And I would not want to be short on a company like SoFi that's actually growing and has a rate cut coming up. So I don't know. We'll see how that ends up playing out, but I do think that's going to be relatively bullish for SoFi, because the shorts might end up having to get squeezed if they really want to run. And then Palantir, short float is now 3%. Only 60 million shares are sold short. It's down 5% from a couple weeks ago. So Palantir short float is pretty small compared to the rest of the broader outstanding shares. All right, one final look on earnings. We have Gap up half a percent, Elastic down 23%, Autodesk up 5%, Marvell up 8%, kind of breaking out right now. Lululemon up 2%, Mongo up 13%, Dell up 3%. It was up 7%, so now it's up 3%. Ulta Beauty down 7.23% on the day. Bitcoin is at 59,498. Robinhood is at $20.23. Palantir, nice job on Palantir today at $31 on the close, $31.09 at the after hours. And then the S&P 500, slightly green on the day at 558.35 as we end out the market close. All right, that's it for me. Thank you, everybody, for being here. We'll be back on the market open tomorrow on Friday. We'll have TJ on at about 10 a.m., go through all the moves we made in the public portfolio. It's been a fun week. Hopefully you guys have been enjoying daily Palantir episode coming out. There was a new article about Palantir. A lot of people missed it. We're going to talk about that. So that'll be out in a couple hours. And I'll be back tomorrow at 8:45 a.m. All right. That's it for me. Thank you, everybody. Have a great day. I'll see you guys tomorrow morning. Bye, everyone. Good night.